I'm with Steve Letwin, CEO of IAMGOLD, now at the BMO Metals and Mining Conference. Steve, thanks for dropping by Kitco.
Thank you for having me. It's great to be here.
How's the conference going for you so far?
The conference is going well. I mean, we've seen a little bit of an improvement in the optimism out there, so it's amazing what a bump in the gold prices will do. We're up about 12%. So we're seeing gold prices recover somewhat, sitting around that $1,350 range, which makes people a lot happier than when they were at $1,200. So.
And we'll get to gold price in a second,
Right.
But first, so fourth quarter results obviously rolling in now. What's the strategy for IAMGOLD in 2014?
2014 are to hit on three main things. One, to make sure we hit our commercial production goal at Westwood and our Quebec mine in Westwood and Noranda. Second is to make sure Essakane ramps up the way we've forecast. We completed a major expansion in Essakane's in Burkina Faso, West Africa. Make sure that ramps up to our projected production numbers, which is about a 25% improvement year over year. Third is to get Rosebel fixed. Rosebel's got some challenges, had some challenges on grade and basically on sustaining production. And we think we have a very comprehensive plan to address that. So those would be the three major hurdles, challenges, goals we have for 2014.
Well, what about, so you're in West Africa, you're in South America, you're in Canada. What's it like juggling those three different jurisdictions?
I'm on the plane a lot. And what you find, it's like anything in life, you don't do multi-million-dollar deals with someone you never met. And so I need to be in those countries dealing with the presidents of those countries on a regular basis. And I do that. So I try and visit our mines about 4 times a year each. So we have 4 main producing mines, the 3 gold mines, and then our niobium mine in Quebec. And it's a goal that I have. It means I'm in the air a lot, but that's part of life.
So mining an ounce of gold, does the cost for you really differ between the 3?
It does. I mean, Westwood, which is a new mine, should see its costs come down quite a bit and sit in that $650 an ounce level. Our mines in West Africa and South America tend to be in the $800 to $850 level, just because the cost of power generally is higher. Our South American mine is a little bit older, so the rock's getting harder. So the older the mine generally, the higher the cost. And Westwood, being our newer mine, will tend to have lower costs when we get it up and running.
Are you looking for acquisitions this year?
Nothing material. I mean, we're going to look in and around our mines for opportunities, but we don't have anything out there big. Our balance sheet is strong. We want to keep it that way. Our major focus is, stay in the game, keep our production up to where we want it to be, keep our costs down, cut capital as much as we can, and keep that balance sheet strong to get through what may be, a rough period.
So Steve, you mentioned gold price before. Let's talk about that a second. Are you on the side of the mining CEO that wants to be bullish on gold, or do you not chase the price?
No one knows where gold's going to be, which makes it probably one of the toughest businesses to be in. It would be like you and I going into business and saying, let's spend $100 million to go and build a gold mine, and not really know what the price is going to be 1, 2, 3, 4 years out. And it's all based on emotion, where the U.S. economy is going to go, et cetera, et cetera. So I have no better formula than the next person, but I'm thinking that based on the way China's buying gold, based on the fact that we seem to hit a bottom around 1,100, that we might stay in this range for a while and then hopefully see it creep up, because I think you're going to see supply start to come off, maybe not immediately, but in the near term. And when that happens, there may be a price response which will help all of us.
So if it stays in this range for you, is that still a comfortable range to be mining in?
I would call it comfortable in that we can cover our capital. For the most part, we can live without worrying about debt. I wouldn't call it desirable, because our all-in costs are around $1,200. So if it's at $1,350, we're making a bit of money, but not much. Certainly $1,500 gold would make me a lot happier, but I'm not counting on it. And in fact, we've got plans in place to make sure that if we did hit a lower number, that we'd be able to get through that storm. So
Excellent, makes sense.
Yeah.
Steve, thanks for joining us.
thanks for having me.
And thanks for watching our coverage here at the BMO Metals and Mining Conference in Hollywood, Florida. You can email us any comments or questions for these folks at newsfeedback@kitco.com. Thanks for watching.